Please confirm you're able to hear me and can see the document. Let's get through those tech challenges first. All right, so the big agenda that I have today, apart from our regular, thesis, is to talk about Internet 3.0. And this is because I think in last couple of meetings, there was interest around let's dig a little deeper into alternative investment, especially starting with cryptocurrencies and things like that. Yeah, so I wanted to bring in and rather than just talking about cryptocurrency, I want to first of all get in little background on it and why I think that the industry as a whole will change the way we engage with the world in say 10 or 15 years from now or 20 years from now. Okay, so that is what I term as Internet 3.0, and we'll look into it, what it is, what's driving all this craziness, and look under the hood of that. So that's gonna take most of our time, and then we will also dig into a regular session of looking at the trades and what's transpired this week and things like that. Okay. So with this, let's get going. Okay, meanwhile, if you have a questions, please add it in the chat. I will be monitoring the chat as we go along, and we'll answer the questions. Okay, so to start with, our usual disclaimer: this is not an investment, financial, or tax advice. This is just for education. We all get together to learn something new. I share what I'm learning, you share what you are going through, and that's how we enhance ourselves from a learning perspective. So take it as a piece of education, not that you should trade on this. Okay. So quick look at the markets, and I'll rather go quickly through this. I think the selling continued, especially in the tech sector, but one thing which really surprised me and a lot of other people is the VIX. Even though the selling has continued, the VIX also fell down. So which is a very unusual behavior. When markets go down, VIX generally go up, but we are seeing that VIX is just not moving beyond 30. Now, there are some theories and some reasons around it, because VIX was already elevated. It was way above its average, so that's why it's not moving up. But that is one thing which really surprised, especially if if we are using VIX for hedging. Really didn't work out this time. So we have to figure out what's different. Okay, but I think otherwise, apart from that, most of the indices, even though they recovered some of it on Friday, but over week, I think each one of them were basically lower. The starting with the technology sector, which was the biggest loser, or almost around 6% down for the week. On the alternative investment, we'll dig into details later on in the session. From the big market side, there were earnings, a couple of earnings I want to talk about. One is Slack and other one is Lululemon. So I have positions in Slack, bullish positions in Slack. And I have been in on Slack for more than a year, and continuously also selling premium to reduce my cost basis. So I own Slack at $30, and my current cost basis is, I think, less than 20. So, but Slack announced their results. I did not find anything which is a big concern to me, but market still, sell off 20%. Slack got a haircut of almost 20% after they announced the result. So let's quickly look into what was in Slack's earning. So their revenue grew almost 49% year on year, which is a good growth. If you're looking at 40% rule, I think this 49% is good growth. They also had a better cash flow position. Thing that I want to talk about more is their Slack Connect. This is their latest product that they unveiled in Q1, and now they are having more and more customers use it. And I believe that this is going to be their next driver for their growth. Good to see that almost 52,000 customers are actually using Slack Connect. Now, the Slack Connect is a product which go beyond your own corporation. So till now, Slack was being used for having discussions within the company. Now Slack Connect allows a company to connect to its partners, maybe contractors, subcontractors, your development partners, etc. So which is I could see is going to be a new growth engine because it give them all those network effects, etc. So seeing a good growth on a Slack Connect is positive for me. So I didn't see much that should cause concern, except one thing, and that's why the market sold off, that their revenue growth, which is what they term as calculated billings, which is revenue plus the change in deferred revenue, it increased by 25%. And over last year, it had increased by 49%. So what market is projecting is that the revenue growth is slowing down, and that's why the stock got a big amount of a haircut, almost 20% down. But I think it'll still a long time before the story will play out, especially around the network growth and Slack Connect. So I am still not bothered about what I'm holding. But of course, we continue to sell premium and reduce the cost basis, right? So that's my play on Slack. Still bullish. They do have a headwinds with Microsoft Teams, but that's been going on for ever since they have been in this space. So we'll continue to watch Slack and hold my positions in Slack. Anyone have questions on Slack? Okay, the other one is Lululemon. Again, Lululemon also got some haircut after earnings, but if I look into the earnings, there's nothing that's I will be really concerned about. The net revenue was more than $900 million, which was increase of 2%. Right? Now, Slack revenue had increased 49% year on year, and it wasn't good enough because investors were comparing it with Zoom. Zoom is a work from home stock, and from my perspective, it was unfair to do a comparison of Slack and Zoom because Slack is not work from home stock. Slack is kind of a replacement of your current office communication tool. So if companies are cutting down on employees, that go against Slack. Doesn't matter whether you're working from home or you're working from office, that doesn't provide much of a headwinds to Slack. But Lululemon, 2% is much better. Slack 49% is not good enough. 2% from Lululemon perspective, much better because it is in retail business. So in previous quarter, the sales actually fell down. Now any retailer, especially if they are not the grocers, if they are increasing their sales, it is much better. So the increase of 2% was even better than what Street was expecting. The highlight was that their online direct-to-consumer digital sales, that increased by 155%. And I think once even the things return back to new normal, people may start visiting back, going back to retail stores. But the investments that they have done in DTC business that will continue to provide them tailwinds. So there was some profit taking, but I think that was a good, I thought that was a good price point for us to get bullish on Lululemon. Asif says, yeah, Slack always seems to sell off on earnings. Very true. I think that's a pattern that we have seen on Slack, that after earnings, it will always have a sell-off. I completely agree with that. Did Slack have a Q1, Q2 growth this year higher than same for the last year? Their growth was higher than expected. Revenue growth was higher than expected. Their EPS was higher than what Street was expecting. Street was expecting them to lose 3 cents in EPS. They actually came even. So revenue as well as EPS, as if both were higher than expected. What they got beaten upon was the calculated billings. That was lower than what the Street might be expecting. Because Zoom is like 355% up. So Slack is not Zoom. Yeah. So in some cases, the stories might take a little more time to play out. If that's the case, I'll still hold Slack. And for us, if we continue to sell premium and reduce the cost basis, then we don't have to bother about much, right? Next one. This was interesting. And Nicola. Question from Liz. So on Slack, you held through the earnings and sold after the report then? No, I did not sell anything on Slack. Liz, I had Slack. I'm still holding Slack. I have a short put on Slack. I will probably roll it out if I'm not already done, but I will continue to be in Slack. And like I said, for me, I had bought it last year around 30, and my current cost basis is less than 20. So if I look at my current position, it is still profitable. So next one is Nicola. Yes, Nike's all-time high. Nike is, I actually had positions in Nike. I had a covered call in Nike, and now I'm getting into what you call that good problem to have, is to trying to roll out a covered call and squeeze as much premium as I can. But yes, Nike is at all-time high. And Nike has a result coming up, I think another 15, 20 days. Or maybe I think it's in 10 days. So that's one reason. Also, Nike has got a lot of exposure in China. With China opening up, that could provide a tailwind to Nike. All right, Nicola. Interesting but very scathing report came out from a short seller called Hindenburg Research. And they claim that Nicola is fraud. So they put together very compelling thesis. They accuse Travis Milton, CEO and chairman of Nicola, of lying and defrauding investors, not just with the current company Nicola, but kind of establishing a pattern of Travis history of defrauding investors.
Hello?
So, and Nicola has been, I would say, darling of many stock investors, especially new investors, for last few months. We had seen Nicola, spectacular rise in Nicola for, let me just open up my app so that we can go through it if needed. So when this report came out, Nicola fell almost 15%. And this report came out just a day after General Motors and had announced investment of $2 billion in Nicola. So it is interesting to see, how this will pan out even for General Motors. But for anyone who is interested in going through the details, I think I had posted the link in our Slack channel. But this is where Hindenburg Research has put together the detailed report and then list of 53 questions that they want Nicola management to address in their defense. So I'll just talk about a couple of things. We don't have a time to go through all 53. First is when Nikola had unveiled their Nikola One truck, saying this is a fully functioning truck. We saw Travis Milton getting into, and I looked at the YouTube, getting into the truck cabin and showing, the reporter how various things work, and claimed it to be a fully functioning. Whereas the people who worked on it and Hindenburg Research reached out to them, they said this was actually powered through a electric cable. It wasn't a fully functioning truck. And all the screens that Travis Milton was displaying on the infotainment dashboard were all the mock-ups. Those were built just for the show. And then there were a lot more accusations. Like I said, this is a 35-page report on some of the history behind Travis Milton and how he defrauded D-Hybrid. And then they talk about what Nikola is doing right now and how it is nothing but a web of lies. That's essentially what they claim it to be. Nikola had showed a video of a truck on the road, which again Hindenburg Research claimed that they had to tow the truck uphill and then let the gravity do the work. The truck was not moving by its own. It was a gravity that was pulling the truck downhill. And that's how they filmed it and showed that the truck is running. Interesting, some text message after the show, the red one is from Nikola employee. And again, this is the research by, this by Hindenburg Research. And, one of the, I don't know, could be a business partner, someone asking, did you guys get the damn truck running? He said, we haven't touched the truck since the show. And essentially says, don't investor ask to see it run? And say, I can't imagine how much work it would take to get that run. So it means when they put up the show, it wasn't really in a position where you can call it as a running truck, right? Again, Hindenburg Research is a short seller. So that means they would profit if Nikola shares go down, which it has already gone down 15. I don't know where it is right now, 15, 20% down. And on top of it, the response from management, especially Trevor Milton, was not that encouraging. When the report first came out, he mentioned that he'll respond within 24 hours. He has answers to all those 53 questions with the data. 24 hours went by, response didn't come. Then he said, we need a little more time. We want to put forth a full detailed response. We'll do it tomorrow. Tomorrow came, nothing happened. And eventually the response that we saw on Friday was that Nikola has retained outside counsel and authorized them to reach out directly to SEC. So Nikola is trying to reach out to SEC and say that Hindenburg Research is just trying to manipulate their stock. And no further comments from neither company officially or from Trevor Milton. Despite Trevor Milton, he is very active on Twitter. He is kind of following all the traits of Elon Musk. Like we all know, Mr. Musk is very active on Twitter. That's his official communication channel. So is Trevor Milton, but we don't see anything coming from, as a response to the research report, nothing came from Trevor Milton. It seems like Nikola is a Theranos. That's what the comparison has been. And, we can all talk about saying, how could a company like GM, if they have invested $2 billion, they must have done their homework. They would have figured out, what Nikola has, what it does not. Their mergers and acquisition team would have done their whole study of their business. But that doesn't always happen in corporate world, right? Theranos had partnership with Walgreens to set up the Theranos station in all of their clinics. And it was just fraud. So by the way, if you want to get deeper into what happened with Theranos, there's a book called Bad Blood. I read that book a few months ago. Very, very interesting, which is a whole detailed account of Theranos story. Kunal is asking, should we short or sell Nikola? If you have shares, I think I would, first of all, I don't have shares because I didn't believe on a PowerPoint deck. But if you have shares, won't be a bad idea to sell. Not, again, this is not a recommendation, but looking at what's happening with the company, they will need some time to clean this mess up. Even if it is all the accusations are not completely accurate, but if you look at the report and the details that they have provided, research seems to be very, very thorough. And if you're trying to short the shares naked, I don't even know if brokerage firms are now allowing to short the shares. When there was a whole fervor around Nikola, when it was a darling of the street, darling of the traders, brokerage firms were not allowing you to short the shares because those were very hard to borrow. And I think in one of our sessions we covered in how some of the trades that looked like seemingly zero risk actually had some of our people's accounts wiped off. So because the cost of borrowing was too high. But in any case, I would not like to short it because you never know what happened on these acquisitions. And if they come up and put forth a very, a compelling reply, and then who knows, the share could, again go back up. And this is very momentum driven, so I would not directly short it. But if you could open up a defined risk, a bearish position, you may want to look at that. A GM has invested in it. Yes, they did take 11% stake in Nikola at $2 billion. And I don't know what GM was, their business development team, and whoever mergers and acquisition, what they were smoking. Yeah, they should have done. And my thing is GM is now feeling so far behind Tesla that they are desperately looking for themselves to create a name in EV space. Nikola came out to be a next favorable company, especially what Street is looking at from a stock market perspective, and GM wanted in. And Nikola wanted someone who actually has an expertise, because Nikola has got PowerPoint decks. They don't have expertise to manufacture vehicles, even though they do have a collaboration with, I forgot the truck manufacturing company in Europe. But they really were looking for someone to come along to give a name to some credibility to Nikola, and GM was a partner for them. Now, what will GM get out of it? I don't know. But for now, I think they must be having discussions on what the heck we did with Nikola. Okay. All right. So that's Nikola's story. Like I said, on quick note at what's happening on the tech side, the rout in tech continues. Apple is down close to 7%. I think of all four, Google, Amazon, Facebook, and Apple was down the most. But the story is not rosy, or picture is not good for any of the tech sectors this week. Nothing surprising there. If you have been watching markets, we all know this is what's been happening. I think last story for today is Canopy Growth unveils Martha Stewart line of CBD supplements. So this was very timely because I think last week we finished the whole discussion on our investment thesis on cannabis, especially around CBD. And we talked about this is going to be a normal consumer products company. The space will become any consumer packaged goods space. So the brand awareness is what will matter and will differentiate. Having the product itself will cease to be a winner in the market. Companies can't derive any I would say, a competitive advantage from having the product. So competitive advantage lies in the branding and the marketing. And I was not surprised to see that Canopy Growth is now tying up to create a separate line, because that's how they have to differentiate. Yeah. All right, so that brings me to the close, end of the session, where we talk about some of the things that caught my eye. I mean, there are many things, but I just want to be cognizant of the fact that we have limited time. And trades I'll get into later. Let's move on to our next section, which is Internet 3.0. Minda, any questions, anything that caught your eye? Anything in markets that you have a question on? Cool. All right, so let's move into our next, and I'm very excited to talk about this, which is Internet 3.0. Ramesh says, I followed because of GM, heard GM is being sold short. Yeah, I think I didn't look at the GM stock, but I'm certain that it would have also gone down along with Nikola. No, I don't think it is because of that the earnings is over. The way market has sold off, we should have expected VIX to go down. I think it is because the VIX was already very elevated even prior to the market sell-off. Generally, when the markets hit all-time high, I think 2 weeks ago, VIX was still at 25, 26. It had never gone down to its average, which is like 17. Or long-term VIX average is between 16 to 18. So that could be a reason why we did not see VIX taking off when the market sold off, because it was already at a higher position. I have not made 100% profit on hedging. I think it's someone else. What I mentioned was, Tez, in Slack channel, is that my fingers are itching because my hedges are now 10x, which may become 1000%, 10 times of what I have put in. But I'm so itching to take the hedges off. But then I realize if I take the hedges off, my portfolio is exposed. So what I was saying in the chat was, I think I should not just look at my hedged positions, because I would make a stupid mistake of taking gains on hedges and then leaving the portfolio exposed. It's a difficult decision, but I'm trying to become better in managing portfolio. That's what I meant. All right, so let's get into our big topic for today, which is to talk about Internet 3.0 and maybe look at some areas if we want to play, as an investors in these areas. What are the different areas and how can we get into into this space? So like I said, I am very excited about this space, and I would want to warn you that if you want to, go through this rabbit hole, there are too many things to catch up. It's a wild, wild west. So, decide for yourself how deep you want to go in this. So I'll just probably share my own story. It was in 2017, June, May, sometime that time frame. I came across a I listened to various podcasts. So I had told my wife, and because, I'm going for a walk. And then I was listening to a podcast, which is an hour long, which was about this whole 3.0 investment. And that 1 hour walk stretched to 3 hours. My wife called me, what's happening? I said, I cannot put this down, because that podcast had 3 series. It has got around this whole Internet 3.0. And that's what got me so interested. After 3 hours of my walk, came back, spent until 3 a.m., 4 a.m. just trying to understand. It opened my eyes to a completely new area, which I could not even think, I was completely missing it out. So I stayed engaged until 2018 mid. because that's when I also started option trading. And then I had to decide where I want to spend my time on to learn and grow more into options, because I started options in 2017, 16 end. So I was new to that also. And I said, along with my job and ferrying kids for their stuff, and now, learning options and now learning Internet 3.0, I had to decide. Then I said, you know what? I want to focus on options for next few years. And because there was a lot of stuff which is still needed to be done in Internet 3.0, I said, let this industry mature and maybe I'll come back later. So now I'm getting back into it. Thanks to you guys, because you wanted to, get more details around cryptocurrencies. So that's it. Okay, I'll get back into it. And a lot of things have happened since then. So brace yourself. We are on a journey that might, it blew my mind, and this might be very exciting for you as well. So before I talk about, what's Internet 3.0, let's look at an evolution of Internet. Very first level, Internet, quick to term it as 1.0, in which we were having, static websites. Every company is putting their website, and it just served as a information portal for us, right? The existing information was being put on the web, and it disrupted a lot of libraries, right? That's what happened. Many of the libraries or things like Barnes and Nobles, all the publishing houses, it disrupted them. Next is 2.0, where we as an individual started to publish the content, right? Freedom to, now today, everyone is a publisher. You publish a content on Facebook, we publish a content on Twitter, we publish content on blogs, but who are monetizing that content? It's the Facebooks of the world. It's the Googles of the world. It's our content. We are content creator. Today, everyone is a content creator, but we are not the one who are monetizing that. There are other companies which are monetizing that, right? Web 2.0. 3.0 is where the power comes back from these big companies, power back to individuals, wherein the creator of the content, I will own, and I will be able to monetize my own content, right? Now, what's driving there? This is improvements in technologies, things like blockchain. So that's the foundation of this whole revolution, which is termed as Internet 3.0. Okay. That's what called as a decentralized. And if you are a little active on this space, you'll hear this word being used, everywhere. This is the whole basis of 3.0, is it is decentralized. Means the creator of the data will control and own the data. It's not that the Facebook will be controlling that data. So, and secondly, is no single point of failure, because there is no single entity through which the data is being distributed. So Facebook goes down, doesn't matter, because the whole data is not centralized. Someday Vivek coin. Yeah, we'll get into coins. Sachin will get into coins. Not Vivek coin, but we'll talk about coins as well. So decentralized means if the whole data and the power is not concentrated in one single entity. So if that entity goes down, it's still okay. Doesn't matter. There's no single point of failure. In this case, the buyers and sellers will interact with each other. So if I have to, today, if I were to sell anything, say my car, I have to go to CarMax.com, Carvana.com, or Craigslist to list my car, right? And those intermediaries, they will own, take some cut. And if you are looking to own a car, you will again go to those portals to look for the car and then to buy the car. Because now there are intermediaries where the data is getting centralized. But when we talk about decentralized world, it is you and I interacting with each other directly. We don't need those stinking intermediaries. Yeah. So the issue is, what ails a centralized system? What's wrong with the system that we have today? I think in sitting in United States, it's difficult for us to fathom because we are first world country. Our systems are, and touch wood, are not rogue. And there are rules which everyone follows. And we have a very sound legal system, and which keeps this whole machinery moving. Okay. But do you recall this? What happened? 2013. The rest of the world is not like, United States. And that is why outside of United States, there is so much of things happening in this industry that we are unaware of. So if you recall, in Cyprus, overnight, probably not overnight, but over a time period, over a week, the banks in Cyprus decided that they had to save themselves because they haven't been managing their own affairs really well. And when the financial crisis struck in 2009, 2010, it reverberated throughout the world, and the banks were really, really in a bad position. So what Bank of Cyprus decided, everyone who has a CD or who have an account beyond 100,000, whatever that currency Cyprus has, will get a haircut of 47.5%. Straight, they took a decision. Imagine Fidelity coming and saying, oh, we are in a bad position, the markets are down, Fidelity needs to survive because it is too big to fail. And that means everyone's retirement amount is now cut by half. What recourse do you have? In centralized world, there is no recourse. Because Bank of Cyprus controls it, the government agreed, lawmakers agreed that this is the only way we can save this bank. So everyone gets a 47.5% haircut on their deposits. People's life savings that they had deposited in the bank have now been reduced by half for no fault of the people. So, but these things could happen because bank controls everything, right? Tomorrow you log into your bank account, you see that your balance is reduced by half. You can't do anything in Cyprus. Another example. And this happened in Russia as well as this happened in China. Now, what happened in Russia was there were dissenters, a group of dissenters. When they woke up, try to go and log into the bank account, they suddenly realized that they are owning money. They found themselves $1.2 million in debt, suddenly out of a blue, because the Russian government colluded with the bank and forced them to change the numbers. Right? At the end of a day, what you own, what I own in a bank, it's just number in bank system. I don't have hordes of cash, right? It's just a number in the bank system. So banks change the numbers, and suddenly those dissenters, they are seeing that they owe $1.2 million in debt. Now, if they want to buy a car, they want to buy a home, they want to take any loan, they can't because they're in debt. Again, why? Because it's a bank. It's controlled by the bank. Sitting in US, we can't even fathom that these things could happen, but these are the realities of developing or third world countries. There are a couple of examples. There will be many more examples. Right. So what happens in the centralized world? Okay, so the record keeping is with one person. Right. So take an example. We are 24 people out here, right? Say this is the whole world, 24 people in this world. Okay. So we got 1, 2, 3, 4, of 24 people out here. And let's say, okay, so 23 people, and we transact with each other. But all the records of our transactions are kept by, pick up, let's say, Kunal. We nominated him as a banker. So he has got the whole big ledger of who owns what. This is me, let's say this is Des, this is Mesh, Ravi, Shannon, all right? So Kunal owns everything which says who has what. And anytime we want to enter into transactions, we send the transactions to Kunal. He'll update this ledger saying, Vivek sent $10 to Shannon. Vivek's account is reduced by $10 and Shannon's account is credited by $10. That's what today happens. We interact through banks, right? If I were to send money, I'm not bringing, $10 over to you to your house. I just transacted through my bank or through PayPal, which essentially goes back to bank. Again, intermediaries over intermediaries. So this is what? This is a centralized place. Okay. Now, I either bribe Kunal or put him under duress saying, just, update the entry, move the money from Shannon's account to my account, even though Shannon has not agreed to. And he agrees to under duress. I won't say he's dishonest, but under duress, I compel him. And he updates the entry. What recourse does Shannon has? Nothing, because this is the source of truth. That's it. This is the source of truth. Any entry in this is what determines who owns what. So there is no recourse for Shannon. Similarly, that's a very simplified version of what today we have, and we all are okay with it because we are we are lucky to be in this country. We can't even fathom what the issues could be with this, right? So, but like I said, what we saw in Cyprus, people got haircut. What we saw in Russia, and similarly, there was another story in Wall Street Journal about some of the Chinese dissidents. Okay. So how did we get there? Because we have been relying on centralized intermediaries for record keeping. Banks, government departments. Government departments are for, let's say, who owns what property, right? If we have to find out the ownership of house or property, we go to our land and registration department of a government, because they are the keepers of those records, and a lot of other financial institutions. Today, I would say I own so many shares of Slack. Why do I say it? Because I have to log into my TD Ameritrade and I see that there are Slack shares in it. Tomorrow, if those shares disappear, it's gone. I have no recourse. TDA has gone rogue. They won't listen to me. And the justice, the legal system is not strong enough. So then in that case, I have no recourse. But why do we need those intermediaries? Because we can't trust. As a human being, we don't trust the people whom we don't know. Right? If I were to send some money to you, and because you were to send some goods to me, I won't directly send it to you because I don't know you. I don't trust you. So this lack of trust, because we can't trust the people whom we don't know, is why we need these intermediaries. And there's a trillions and trillions of dollars of business that these intermediaries own, right from banks, any financial institutions, escrows, anything. So what if intermediaries have gone rogue? We talked about two cases, real life cases, Bank of Cyprus, what happened in Russia. You can look for many more examples. We already talked about that. Bank changes your balance amount, or government confiscates your bank accounts, or civic agencies update the records without your permission. And this is, again, a reality in third world countries. If you have friends, from those countries, talk to them, understand them. One constant fear, if they have some assets in those countries where the legal system is not strong, and they don't rank well on that honesty index. You will see one constant fear is, what if somebody bribes a government official and fudge the records saying the house that I have in that city is actually now been in his name. The records are being updated. You have not much of a legal recourse. When was this? Amit says many Indian banks to Punjab National Bank. Yeah, PNB. I was not aware of the PNB case, but again, I'm saying this is a reality of a life in developing and third world countries. So what could be a solution? Because we can't trust each other, because we don't know each other. So we have to bring in these intermediaries. Now the power gets concentrated on those intermediaries. So what's next for us? Is there any solution to it? So let's get back to our same example. Let me start this thing. So we had Kunal here. He owns a ledger registry. This is me here. This is Shannon here. Say, let's pick up, this is Ramesh here, Deepak here, and say this is the whole world. So now in the previous case, Kunal had this registry wherein he is the record keeper. In this new world, say, I am also a record keeper. I have this registry. Shannon has the registry. Ramesh had the registry, the whole ledger. Everyone has a copy of that ledger, right? 25 people, all of us have a copy of this ledger. In that case, if I go and force Kunal under duress to update the record, but when Kunal transmit this record saying, okay, these are the new balances, Shannon is going to check, say, doesn't look like that's correct. Ramesh is going to dispute it, not correct. People are going to dispute it, not correct. So what happens? This change gets rejected. It won't be added as a truth of record. So this is one example of solution to centralized system is no one clear-cut owner for this. We distribute the whole ledger or journal. This is what's called distributed ledger. And the technology is called distributed ledger technology, or what is that commonly known as blockchain. It's very simplified. I want to dumb it down because this is really technically, it's a very complex solution. People have been working for decades on this one, but now in 2009 is when a white paper was published. That's where they realized that what can be done, and we could truly have a decentralized system. Distribute the ledger to everyone. And as long as, if most of the people agree that is the right transaction, only then that transaction is accepted. So I don't mind if Kunal's laptop is down or crashed, we still have a record of other ledger, right? No single point of failure. So let's get deeper into this. And again, it might sound like a sci-fi at this point of a time. So we need to have a decentralized record keeping system in which no one entity is record keeper. It's not only Kunal. Everyone has a copy of a record and can see who owns what, so that anyone trying to fudge the record, either he has to bribe everyone in the world, when I say whoever are participating, otherwise the change in the record is not accepted. No one authority can arbitrarily change record. Kunal is no longer in a power, or Vivek and Kunal cannot collude and try to change the records, change the system arbitrarily. Any record when added, modified, needs to be fact-checked by multiple entities who are part of that system, decentralized system, and agreed upon. Without that, you cannot change the record. Okay. And the key is to have a system where we don't have to rely on trust between the transacting parties, right? Because the moment you bring up and share the records with 20 people, the key question that comes in, I don't trust those 20 people. I don't know them. So the key point here is, how can we have a system in which I don't have to rely on trusting the other party with which I'm transacting? Is there a way we can build such system? But the transaction has to be trustworthy, even though I don't trust the other party. So we have to build a system that operates on principles of trustless. Like I said, I don't really have to trust the other person that I'm interacting with, but the transactions still need to be trustworthy. Build a system where everyone has access to data, but no single person owns the data. That's exactly what we saw when we looked at an example of us and all of us having the ledger wherein all of us have access to data. But Kunal is not the only one who's owning the data. Data is also with everyone else. And everyone else is free to update the data. It's not only Kunal. It does sound like sci-fi, right? Do let me know your feedback. Do you think this is kind of out of this world and I smoked something today? How do we have something in which we want to transact between two people we don't know, but we could still, the whole transaction could still be trustworthy? For me, this was really, really interesting area to dig into. So that's where this technology comes in, which is called blockchain. And in 2017, 18, again, let's separate the hype from the technology. A lot of time, good technologies get a bad name because they are hyped up by people who want to have a short-term profits. Oh, okay, I just wanted to make sure that recording is on. So there has been a lot of work happening on a blockchain for, like I said, now almost 10 years. But it came into limelight in 2016-17 because Bitcoin started to become a common name, which a lot more people started to become aware of it. But forget about Bitcoin. Right now, we just want to talk about the technology which allows this whole decentralized way of living and way of working. That technology is blockchain. So what is this blockchain technology? It's a new way of storing information. And now you must be thinking, is that all? We store information in databases, in softwares. We've been doing it for years. So what's new in this blockchain? Why it became one of the hottest topic around the world in 2017, 18, And it is really, even now, also a very hot topic across, I would say, China, Europe, not in US anymore, because we'll talk about that. Uh, and the reason is because it allows us to enter into decentralized world. So what is blockchain? Blockchain is a ledger which is used, which is owned by multiple owners called nodes. It's a network. It's like on internet. You are connected your laptop to internet. You are a node on that internet. Right? Similarly, if you are in your company, you're working in a company, you have your corporate intranet. Everyone connecting on that corporate intranet is a node on that corporate intranet. Now, there's a whole blockchain network created on internet, and anyone who is connected to that blockchain network is called a node. You can connect it too. I mean, you don't need to be a rocket scientist. You don't need to have $1 million to connect to blockchain network. You don't need to have a big heavy machines, in the data centers to collect to blockchain network. You can connect it to, I can connect it to. And we all can become a node, and we all can own that virtual ledger. So any change to that ledger, if someone transfers the money or someone updates some contract value, first of all, it is verified through technology that whoever is asking for that change is really the owner of that information. And it is, when I say verified, technologically means using cryptography. And I won't get into the details of cryptography because it's at some places it's also beyond my own capability to understand. Even though I'm in technology industry, it is too deep in terms of technology. So it is verified, and then everyone get to see what the changes have happened. So why it would change? If every information that in the world will be stored the way blockchain is suggesting, why it would change the future? Because it has a potential to disintermediate the third parties that we have today for everyday transactions. If you have to send money to Kunal, I have to depend on bank. Now, if we have a common ledger, distributed ledger, where it shows clearly that Vivek has got $100, Kunal has got $100, I transact money, I send money to Kunal, my balance goes to 90, his goes to 110, then I don't need bank. Why would I? Kunal and I, we would directly transact. Shannon and I, we would directly transact. So if we have this permissionless, means I don't need anyone's permission to go and add the transaction into the ledger. Today, if I were to update it, I need a bank because bank owns that ledger. I can't directly update it. It's a bank who has to update it. But if you're talking about a decentralized ledger, it's a permissionless. We can talk about there are some permissioned ones also, but it's a permissionless. It is distributed. It is immutable. Immutable means if you have made an entry 1 and everyone has agreed that this is a correct entry and it is then etched into the ledger, you cannot change it. And this is, I feel, is one of the most attractive feature. If this house is recorded in my name, then corrupt officials cannot change it and change the records to say this house belongs to someone else. Right? Then, because now everyone has got a record of everything, we don't need third parties. Then we don't, it could imagine all the things that we do where we have to depend on third parties. You have to buy a house, you need an escrow company. You need to have record your assets. We need our government civic agencies. Our identity is with, where our passport is issued by US Passport Office, right? There are everything that we do, we deal with intermediaries, and this has a potential to disintermediate all those transactions. So they started with a single use case, which is one asset, which is currency. And that's what came to be known as Bitcoin. So there has been work happening it for almost 3 decades. But it was only in 2009 when someone known as Satoshi Nakamoto presented a white paper on how we can truly have a currency in which it would be distributed, means it will be a decentralized, and it also solves a problem of double spending. And that white paper was what started the Bitcoin. It came in 2009. Nobody knows who is behind us, the name Satoshi Nakamoto. But that's where this thing started. Now, if you read through the white paper, and I've gone through it, what it explains is this blockchain technology. And that white paper says that using this technology, we can have a permissionless distributed immutable ledger, which will have a recording of who owns what Bitcoin. You could put any assets, but at that time it was just a Bitcoin. It came to be known as a Bitcoin. The whole idea was they were looking to create a digital cash. So it started with that single use case in 2009. Now, lot many use cases are being found, and it is being used for lot many use cases. Let's say, I can give an example. Let's say an internet in 1979, 79, 70, when it was started as a network between universities to share information among the scientific community. That was the purpose with which internet was started. But look at today. Using that same technology, we are doing everything on internet. Who could have imagined that at point of a time? Similarly, when the blockchain's first usage was in Bitcoin, but now using the same technology, lot more general purpose uses are, use cases are found. And that's where you see a lot more other things like Ethereum and things like that. So currency is just one use case. And the problem is that it got such a bad name through that Bitcoin, the initial use case, that people just say, hey, it is only for scammers and all that, without looking deeper into what the technology was providing us. So that's what I want to not talk about the coins and investment to start with. I want to first talk about this technology, because there are many more use cases. Remember, no one knew or could have imagined Netflix in 1980s, right? That internet could give birth to Netflix, could put in Amazon, we could actually transact payments over internet. So if we become blind to what's the underlying technology, we would miss out on all other big use cases which will change our world. I see a question. Why do scammers want to steal the currency if they have to make known the ownership? I'll come to that, Liz. I'll come to that. There's one myth which I'll talk about it. We'll bust that myth. Like I said, there are solutions for multiple business use cases. You could have decentralized exchanges, decentralized storage. Today, if we have to store, we use Google Drive. What if Google goes rogue? What if Google crashes tomorrow? I know I'm giving an extreme example here, but what if? Could happen. So there are use cases that are being built to even decentralize the storage. So beyond currency, there are many use cases which very smart companies are working on. So in the end, I would like to say any and every industry that has intermediaries will be disrupted before we know it. So it's wise for us to start opening up ourselves in this world and just be a little aware of what might be happening in this industry. It's like we are trying to understand internet in 1980s. It's good to be, start dipping your feet at this point of a time. So some of the other use cases, we talked about currency use case, right? Which is either you use currency for transactions or you use currency for store of value. We already looked at that. Currency has a ledger, has a record of who owns what. This is again similar to our real life, where the ownership of currency is reflected by credit and debit entries in an electronic ledger maintained by the bank. Only thing that what's been done in a decentralized world is there is no central bank that owns that ledger. You could own that ledger, I could own that ledger, anyone participating in that blockchain network could own that ledger. It's owned by unknown and unlimited number of parties. So how the money moves, say if A wants to send a money to B, they put together in a block, it is sent to every party, they check whether the transaction is valid. It's not only the centralized Kunal checking the transaction is valid, multiple parties will check. And once multiple parties confirm that it is valid, you add it in the chain. Now, once you add it in the chain, you cannot go back and reverse it without any significant efforts. And we'll do again into the details. So this is why it is called blockchain, because the blocks are being chained together. What are the other use cases? Could be, we looked at a currency use case is medium of exchange or store of value. It's being used in remittance. Remittance means if you are sending money from one country to another, you're remitting money to, let's say, there are a lot of people who move outside of their home country. Their family is still in their home country. They want to send money. That's where they use remittance. And we have a very established companies like Ripple that uses blockchain for remittances. It could create all the smart contracts. Today we have a paper contracts, and we have a team of lawyers who sign, help us in signing the contract. Then we have an escrow which will make sure that both parties actually adhere to the terms of contracts. But what if we could have a smart contracts which are indelible, cannot be changed, and are enforced through technology? Your privacy, the use cases around social networks, storage. Again, I won't get into this. Is the latest, hottest topic is DeFi. Not going to talk about it today. That's another rabbit hole. If this wasn't enough. It was India, the government want to put social security as coin and ID coin. How does this transaction updated in load in ledger get validated and accepted by all ledgers? We can get into those details here. Just stay on. So when we talk about the currency, why, I want to look at, because this is the most common, I would say, known use of this technology. So I want to spend a little more time on this one. Is when we say, can Bitcoin be used as a currency or a money? Let's first look at what are the characteristics of that money. And then we look at a Bitcoin, does it have all those characteristics? Right? First, money should be durable. I should be able to use that over and over again. It shouldn't happen that, it's like a Mission Impossible tape, that this recording will self-destruct in 5 seconds. That shouldn't be the case. It should be durable. It should be portable. I should be able to take my money around. And that's the reason, why some of those some of the things that were considered as money few hundred years ago are no longer there, because a big stone was considered money as store of value. You can't port it easily. As long as if you're not moving, it's still okay. But the moment the people started moving from one place to another, the big stone is no longer considered as money because it needs to be portable. Money needs to be divisible. A dollar should be able to divide it into pennies because, hey, if I'm transacting it, I may not always have the exact bill. It should be able to divide it into smaller values. It should be uniform. It doesn't matter which mint is printing a dollar. A dollar is a dollar is a dollar. And I can replace $1 with another dollar bill without any loss of value. It's a uniform across. And lastly, it should be scarce. And this is where now I have to start have concerns because what we are seeing, what Fed is doing, that's where people say that that it doesn't look good to be, these Fed actions are not good for long term for United States as a reserve money, because if it is not scarce and you can print it at your will, then that's not a money. That's not a store of value. Why people consider gold as still as a store of value? Because there is limited amount of gold available in the world. Till now, people have a faith that it's only, will have a limited amount of dollars in the world and it could still stay as a store of value. But if everyone can print dollars at their will, then there is no value in storing the dollars. And lastly, it should be acceptable. If it is not accepted, even though all other characteristics are present, you won't be able to use it for goods and services. Right? That's our end motive or goal for the money, is to use it for purpose to live our life, right? For transactions. So let's look at what's Bitcoin and with the current currencies. We first talk about durability. Once you have a Bitcoin, you create a Bitcoin, it stays forever. It doesn't decay. Your paper bill, might tear off. Bitcoin doesn't tear off. Portability, you can take it anywhere. It could exist on your laptop. It could exist on your mobile, or it could exist on something what's called as an offline storage, a USB drive. You can carry it anywhere across the boundaries. Divisibility. Bitcoin is also divisible in smaller denominations, what is called as a Satoshi, which is 1/1,000,000th of one Bitcoin. So today Bitcoin is what? $11,000, let's say. If I were to buy a coffee for $5, I don't want to give away that $11,000. I would rather pay in Satoshi. It is divisible. Uniformity doesn't, again, a Bitcoin is a Bitcoin is a Bitcoin. And when I say Bitcoin, let's say anything and everything, all the coins which are being treated for currency purposes. Doesn't care where it got mined. Who mined it? If a Bitcoin has been created, if a gold has been mined, irrespective of which miner was involved in, as long as it is gold, what we consider to be gold, it is same as any other gold. All I'm assuming is all is whatever that 99.99% that purity. Scarcity. Money needs to be scarce. 21 million maximum Bitcoin. Currently 18.5 million already mined. Remaining expected to be mined by 2140. Again, I put a asterisk over there because it's like a Federal Reserve. Could it be possible that the whole Bitcoin community network may agree to mine more? We don't know. I don't have an answer to that. We don't know what may happen in future. But today, the way protocol works is only $21 million is the hard limit. So lastly is acceptability. Many governments and businesses, they do accept Bitcoin as a form of payment. It's not widespread, but slowly and steadily, more and more businesses have started to accept Bitcoin as a form of payment. But how is it different? So the fiat currencies mean the regular currency as we know today, which is controlled by government. How is it different from those fiat currencies? It's not controlled by a single authority. It's a ledger shared over thousands of computers over internet. It's limited supply. I put in here because of what Fed has been doing, right? Fed's printing machine is like non-stop printing notes, dollar bills. So we don't know if dollars in limited supply or not. In that case, Bitcoin is different. Immutability. Once a transaction is recorded, it cannot be altered. So a hacker or dictator cannot claim something that they didn't own. We don't see those things in US, but these things are very prevalent, like country like Venezuela. We looked at a Cyprus. Government claimed the money that was not government's, but of a people money, and they claimed it to be their own because they changed the ledgers. But if you, on a Bitcoin ledger, it is immutable. It has never been hacked. This ledger has never been hacked. It's not that there's no attempt. There are multiple attempts to hack Bitcoin blockchain, but it's never been successful. So we only talked about currencies, right? And I told you there are many more use cases, and there is work happening on all other use cases. Let's take a quick example. Browser. There's a browser called Brave, which is, again, if you are in a Brave browser, if you agree to view advertisement, you get paid. The first thing which I talked about is in Web 3.0, how each individual can become owner of their content and can profit from them rather than the centralized authorities. Brave browser is one example. Storage. Instead of Google Drive, there are companies like StoreJ, IPFS. Again, I'm not going to get details into each one of these, but there is work happening across all the different types of use cases. And then there are companies that are working on it. Each one of them probably are in different stage of growth as a company. And many of them would go bankrupt. Many of them will not succeed. But eventually, winners will emerge once the technology stabilizes and we understand how to create these decentralized apps, dApps, so that we don't have to depend on Facebook, but maybe use Steemit. So if you post anything on Steemit and is liked by a people, you probably get paid for it. If you do the same thing on Facebook, it's a Facebook that earns money from advertisers, not you. But on a Steemit, it would be you. Right, other use cases I quickly referred earlier, that remittances. Again, this is a Ripple, is actually using blockchain technology to send money between countries in a much quicker way than using the Swift messaging system, which is currently used by most of the banks. Again, these are not just theory. This is a work which is already happening. Buying a house, another use case. Heard a beep. Everything still able to see me? Sometimes I do hear the beep if there's a network issue. Okay. Buying a house today, why take so much of a paperwork, etc.? Because we have a lack of trust. But if you could use blockchain and remove all the intermediaries from there, it could be much quicker, much cheaper transactions. There's one company in the US, which is Propy, which is using blockchain for your title exchanges, etc. Just one little portion of the overall, house buying process. But it may not be far away when the whole process could be put on a blockchain, So a couple of use cases. There are many more use cases. Like I mentioned, there is work already happened. The latest one is on completely decentralizing this whole finance industry, means exchanges. So if you start looking into DeFi, you would see that there are, instead of a NASDAQ being a central exchange, there are decentralized exchanges where people have started to transact, these coins, etc. So that's a new, I would say, hot topic is DeFi, decentralized finance. Let me get through some of the questions and then a little peek into technology. And like I said, the technology is too detailed. I probably will not get into the whole details, but barely just let you know that in a non-tech, as much as I can dumb it down, try to explain how is it even possible. Why did it sounds like very sci-fi, but it is not. And that's why we'll do a little deep dive into the technology. So Liz, as I would show it later. So your identity in this world is a number. And why scammers want this is because they probably, let me give an example of, let's say you go to your bank, you open a bank account, and your bank has not done a good job in checking that you are in the list. They have not known they have not completed their know your customer procedures. So you didn't have to show your ID card over there. You gave a name Jane, and you opened an account, and that's an account number that you would ask everyone to send money, right? Now, in this case, there is no bank, so there's a number. So what scammers do is they always give you a address, means a number, and say send the money to us on this number. So I will give you an example of you and I. We can go and actually look at how much money is lying behind that number. But what we don't know is who is the person behind that number. And the reason we may not know is the bank or wherever that number was generated, they may not have done their know your customer work. Or that you can create your own ID also. So that's the reason scammers want, because they can hide behind that number. But you and I, we can look at how much is a Bitcoin is in that number. And I actually will do that. How does the transaction update on node ledger get validated? That's what we're going to talk about when you're looking into this tech. Are 21 million enough for everybody in the world? So if we consider 21 million, it can further be subdivided into million with the Satoshi. It may or may not be enough. And that's why the Bitcoin price will determine who has what. It's like saying, if we mint all the gold in the world, is the gold enough? Probably not, depending on the demand. And if the demand surpasses the amount of gold that we can mine, the prices will rise. And that is why, if you read the recent blog by Winklevoss brothers, because they own the Gemini exchange, which is again a coin trading exchange, they projected like $500,000 Thesis for one Bitcoin price. I have seen estimates anywhere from 50,000 to $1 million saying Bitcoin would be worth. Who knows what would be, right? So I'm not even getting into that discussion. But the fact is, if its use become widespread, if it has started being used as a store of value, if it could replace gold as a store of value, today gold is what, 4 trillion, whatever that gold amount of money in gold. In that case, the number of Bitcoins may be limited, but those who might be holding it, the value of the Bitcoin will increase. Do you find this fascinating? We have been oblivious to all this for so long. And it is not only to be used by scammers. Any comments so far? Any experience with this, with Bitcoin, etc.? It is sci-fi. Like I'm telling you, if you get into this rabbit hole, it'll be very difficult for you to, should I give up? Because it's so exciting. For personally, for me, it is very exciting. Is it true NVIDIA chips were used? Yes. NVIDIA chips were used for mining the Bitcoin. Because again, this whole mining process works on computers, and you need faster and faster computers. NVIDIA chips were what they call as graphic processing units. those chips can do one portion really, really fast, which is calculations. And that's when in 2017, everyone was jumping on a bandwagon to, mine a Bitcoin. It's like a mining, a lot of companies going to gold mining, John Deere, and Komatsu, those companies will do good, of course. Similarly, Nvidia did really good because everyone was fighting to get the hands on Nvidia GPUs. So let's get into the tech. Like I said, this is a blockchain is a underlying technology. It's like a spreadsheet in the sky, which is shared. Everyone can view it. Google Sheet. It is public. The real decentralized blockchain is a public one. Now, using the same technology, you can create something which is not accessible to all. Right? But we're not talking about those. It's like internet versus company-specific intranet. But if you look at a Bitcoin blockchain, that's public. It has got a ledger of transactions. Anyone can inspect the transaction, but no single entity will control that. It's not that one of these computers shut down, it has come to halt. No, that's not the case. So, like I said, there are three. The core behind this technology is cryptography. Because of the advancements made in cryptography and P2P network, this technology has become possible. P2P network means peer-to-peer, means I am directly connecting to another person's network. I don't always have to go through a centralized system. So if you look at the evolution of technology, it started with everyone trying to connect to a server. That's what used to be called as client server. 1960s, 70s, 80s, all the technology development happened around client and a server, how those behave with each other. Those big mainframes that all IBM mainframes that all the processing plants and the financial institutions had used, how each of the branches connected, because they got some terminals sitting at their end and they will connect to those IBM mainframe servers. Those were client to servers. P2P is each, peer-to-peer network. I can connect directly to your computer through internet, right? And then lastly is game theory. This is what will keep miners, what's known as Bitcoin miners, who will validate the transactions. What's the incentive for them? Those incentives are coming through the whole concept of game theory. Okay, not getting into detail. So the way it happens is this are all the blocks in the blockchain. Every time a new information comes in, it is added to in front of a previous block. And that is why it is called a blockchain. Now, every node in this network has access to the whole chain. Okay, ignore all these numbers. But for example, this is what it is. I'll talk about it quickly. This is one block. It is chained with another block, means this block one will have some information which will connect it to block 0. Now block 2 will have some information which will connect it to block 1. So that's why these blocks are chained together. So now if we want to change anything in block 1, then suddenly this block will become invalid, because when this block was created, it had an information of what the previous block was. And now suddenly, because someone tried to hack it, a dictator or a corrupt government official wanted to update the transaction in the past, this block will become invalid, and all the miners say, oh, it doesn't look right. Somebody messed up with it. So they will invalidate the transaction. So that is why that's why it said it is immutable. But I would say it is not completely immutable. It is really, really, really difficult. because not only you have to tamper with this block, and as the chain grows, there are hundreds, thousands, millions of blocks. Not only you have to tamper with this block, you have to tamper with this block, you have to tamper with all the subsequent blocks, all the million blocks, because these were all chained together. For example, let's say, let me pick an example from a real world, right? Let's say DNA, right? Your great grandparents have a DNA, then their offspring are linked with their parental DNA, then their offspring, their offsprings, right? If you mess up anywhere here, and then this whole, the genetic makeup which came from a parental into the child, now it's not matching, because there's all DNAs are linked to each other. Similarly, these all blocks are linked to each other. Anyone trying to hack not only has to hack everything, after that transaction, but they have to hack it on every computer, thousands of computers that has got a copy of that ledger. Going back to our example, if I'm bribing Kunal or under duress, I ask him to change the entry. Not only he has to change all the subsequent entries, because if I suddenly got $10 more, my subsequent entry says that I got 10 more, then total will become 20. He has to not only has to change subsequent entry in the ledger that he owns, he has to change all the entries in the ledgers that Shannon owns, in ledger that Deepak owns, every ledger. So that's why it is make it very, very difficult to manipulate the data once the data has been etched onto blockchain. You need a lot more power and a lot more hacking power to not change on one ledger, but on thousands and millions of copy on every other place. That's why it is virtually tamper-proof. Okay. Now there are questions around with quantum computing. Can this be done? But no one can answer that. Probably it can be broken down or not. But based on today's computing power, it's not possible to hack. Okay, last one is it democratizes the data, because there's not only one single source of data. Everyone else could have a copy to data. So if one network fails, your bank is down, it's okay. You can get your data from somewhere else. So when TD Ameritrade goes down, we can transact it. Robinhood goes down, we can transact it. But if we have a decentralized finance, I don't care if Robinhood goes down. I could still transact it, because my ownership of what I own is not stored at TD Ameritrade or not stored at Robinhood. It is stored at multiple places. One failure won't be an issue. Okay, quick on the technology. Till now we have talked about till here, record of transactions, because this is what the blockchain layer is. Again, it works on internet. Now, why it is possible now to have that is the improvements that we have made on internet infrastructure also. Then we created this whole blockchain layer. And one application that brought this into limelight was a currency, Bitcoin. But like I said, there are many more applications that are being built on top of this technology. It is at the same stage where internet was in 1980s. The one application that was for internet in 1980s is to publish a page, share textual information. But today, nobody talks about just sharing textual information. We share many things. Similarly, a lot more applications are being built upon this technology. Okay. So there was a question, how does transaction updated in a node ledger get validated and accepted by ledger? Okay, so a little more detail I have to get into that. One is, so when a transaction appears on a blockchain network, and you can send a transaction using your own client. So for example, the client that we all are aware of to connect to internet is browsers. Right? Today, we don't even think about it when we're trying to connect to an internet. It's what am I doing? But imagine 1990s when Netscape came out, it was a big thing that now we have a way to connect to the world that exists only in computers, and that world is called World Wide Web. Similarly, there are blockchains that exist on computers. And for us to connect to those blockchains, there are things which is called blockchain wallets. If you want to transfer money from one to another, Coinbase, Gemini, you can use any of those exchanges, etc., etc. Okay, so now when a transaction, you are trying to do a transaction in a wallet, and then you are sending that transaction to the blockchain, that transaction is available for every miner to pick it up and validate whether it is a correct transaction or not. Now that validation happens, like I said, first of all, they have to validate whether you are really the owner of the transaction. If you are transferring money, let's say if you're trying to transfer 1 Bitcoin, they have to confirm whether you own that Bitcoin. Do you have that Bitcoin in your account, right? So they're gonna look back into all the previous blocks and see, oh, against this address, which is your Bitcoin address, was there $1? Because if you don't have it, you can't send it, right? So when they look at it, yes, you have that dollar. They'll do that validation, run through the whole chain, and confirm, yes, this is a correct transaction. Then there could be thousands of miners. Then they have to solve, and how should I dumb it down without getting technology, is they have to, let's say they have to solve a very mathematically complex process. They have to, before they can add that new block into the chain saying, I verified everything in this chain. This person wanted to send this Bitcoin, and look through all the chain, it does own the Bitcoin. I verified it through cryptography with his private key that the transaction has been legit. It has got the private key of, the transaction is signed, has got a signature. Let me put it that way without getting into the transaction has got a signature of that user. So I know that this transaction has come from that user. It's an electronic signature, not a manual. Today bank verifies it with our physical signatures. Once they verify transaction, then they solve something called a math puzzle. Let's say dumbing down, saying math puzzle, which is very, very complex. Then they add it into the blockchain. When they add into a blockchain, those miners get rewarded by Bitcoin. That's how the Bitcoin is mined. Because someone has to do this validation. Who will do it? If there is no incentive for me to do it. If I don't get paid, someone has to do the work of validation. So that's where miners come into picture. They validate that everything is right, and they get rewarded by their work by getting a Bitcoin. That's how the Bitcoin is mined. Okay. All right. So, like I said, you have to understand a little bit of a technology. Yeah, I don't want to throw the words like hash and nonce, etc. But then the next question, what is a hash, right? So, but this is how the whole mining process works. This is how the Bitcoin is mined from this protocol. And then the miners can sell the Bitcoin. They can do whatever they want to do with the Bitcoin. Now it is becoming difficult to mine. Whoever that person and everyone thinks there has to be a group of persons behind that pseudonym Satoshi Nakamoto, because it is not possible for one person to think through everything. It's got so many technologies involved. You need an expert in networking, in cryptography, in game theory, in finance, that it cannot be a work of one person, Bitcoin. But the level of difficulty of the solving puzzle keep increasing, and the reward is keep having after every 4 years. So when a miner adds a transaction, they get rewarded. The reward is now halved. It was halved in May. Now next time, it means it's becoming more and more difficult to mine it also. Okay, we'll go to privacy. Like I'll go to the, because now we're gonna bust some of the myths. Okay, first myth. Come on, this is not for serious people. This is only startups who gets involved in this. And this is like technologies that come and go. Startups work on it, and they burn a lot of VC money, and that's it. That's first myth. I would say nothing can be further from truth, because there are serious institutions that are involved. Fidelity. And I wasn't aware. I knew Fidelity was involved on a blockchain side, but this is very recent. I think it is from July or August. They actually launched a Fidelity digital asset management. Means, if you think Bitcoin is illegal, why is Fidelity getting into, we will store your Bitcoin? This was one of a problem where when I stopped researching this in 2018 is there is no safe and secure way for institutional investors to store Bitcoin, right? The Bitcoin blockchain is not hackable. It's difficult. That's never been hacked. But once you get your coin, it is in your hands. How you store it? Now, it's not easy to store, because if you have to take it off your exchange, you have to move. I mean, it's not common person's game. You need to understand a little bit of technology. That's where most of the institutional investors had a fear is, even if they invest their client money and buy a Bitcoin, how are they going to make it hack proof? Because now they become the owner. And there were not really good custody solutions. There was a work happening on the custody solutions. There was I forgot the name of the company. I can't recall that. 2019, they came up with the custody solutions. But looks like in 2020, maybe a month ago, Fidelity jumped into this saying, we're gonna store your Bitcoins. We will become a custodians of Bitcoin storage. So institutional investors, home offices, you don't have to worry about that. If you have invested in Bitcoins, your Bitcoin can be taken away by hackers. We will provide you the solution. This is a very, very big step in institutional acceptance and investments getting into Bitcoin, because now Fidelity is getting into basically providing them a custody of digital assets. Okay, so Fidelity is not a startup. JPMC, they actually built their own blockchain platform, and in early 2020, they realized that they don't want to be in business of building technology. So they basically spun off this team of Quorum to another blockchain startup called Consensus. But what JPMC did was they basically created a whole new payment network, interbank information network, and they got 300 banks into it. Now, this is not a public blockchain. You and I cannot look at what's the JPMC blockchain, how much money is being transacted through. This is not a public blockchain. This is JPMC and the bank's blockchain. But understand the technology. They are using blockchain technology, but it's not accessible to all public. But now they're creating the whole network to move the money much faster than what we can do with today's traditional money transfer protocols. IBM has got multiple products with their clients. I don't want to get into the, okay. So there are, if you can go here and look at the top 10 IBM stories with the blockchain here. Okay. So there are serious companies that are involved in blockchain. Second myth, blockchain is only for geeks. This is equivalent to saying that the internet is only for computer cracks. And probably that was true in 1970s, 1980s, early days of internet. Those who were not in computer science, those who were not engineers, did not have access to internet. Other people thought, what crazy things these people are talking. You can you can send a text to someone who is sitting thousands of miles away in a few seconds. Come on, that sounds like sci-fi. I wasn't, I was in Naples during those days, but I'm sure those discussions would have happened. That internet is only for geeky people, not anymore. So, today it is in infancy, and that is why it seems so sci-fi, so esoteric for us. But slowly and slowly, it will creep into, like internet has crept into our daily lives. We don't even think about internet when we're doing certain transactions. In a few years or a few decades, we won't even think about transacting when that, hey, the underlying infrastructure is actually blockchain. Oh, this is the biggest myth. I think there were questions also, right? Bitcoin is anonymous. That's one of the biggest myth, right? Like I said, Bitcoin ledger is open for anyone to see. It is not anonymous, but I would say it is pseudonymous. So, like I said, I'll actually give an example of a Bitcoin account. We'd like to see what happened. If you have a little investigative itch, you can scratch that itch by doing this. So this, when the recent Twitter hack happened, where they actually hacked Twitter accounts for 130 personality, I can't recall the number, whatever the number was, right? Including Elon Musk and Barack Obama and Joe Biden's. They asked people to send Bitcoin to this address. Okay, so now only information that I'm not even in law enforcement. As a common person, I have this address. Okay, let's see what happens here. Now this is kind of one of a explorer, like we use Internet Explorer to look at what's on internet. You have a blockchain explorer. There are multiple blockchain explorers. I want to look at Bitcoin Explorer, sorry. Blockchain is a generic term. So there are multiple Bitcoin explorers. I want to look at what happened on the address. So good thing that this Explorer has done. They always says that this has been involved in fraudulent activities. Please execute caution. I don't care. I don't want to transact. So this Twitter hacker, they totally received in this account. They probably would have posted multiple Bitcoin accounts. In this account, they received 134,814.93 cents US dollars, which is someone's, all people send them 12.8745 some whatever Bitcoins. You want to look at how they received these Bitcoins, where are they moving? These are all the list of transactions. Plus means this is how the transaction Bitcoin came into this account. Negative means these Bitcoins were taken out of this account. Now tell me, I know your account number. There is no way I can get these details. But if I know your Bitcoin address, I can come and explore. So let's say, this hacker, and I don't know why people are still sending money. 26 July, I see 0.003 Bitcoins, maybe whatever is happening. So if you want to see how they received look at the pattern of money, people have been, when this was hacked, maybe a lot of people send them money, and it is represented here. Let me go back and see. I think if you add up all these plus, it amounts to $12.874 blah, blah, blah Bitcoins. I'm interested in what that hacker did with that Bitcoin. Okay, so I want to look at, I think it was the next page. He received all this Bitcoin, then he withdrew 4.560 Bitcoins. He withdrew, this is a big one. He withdrew a chunk of Bitcoin. So let's find out. Where did he send these Bitcoins? I want to look in this transaction ID. So this was the Bitcoin. He basically sent it to two separate addresses. He sent it to 4.299 Bitcoins over here, 0.76 Bitcoin over here. I want to see what he did there. He sent it, he withdrew it, everything. He then sent it to this address. I want to dig deeper. Now he again broke it into these four. So you can get into this rabbit hole as much as you want to if you want to scratch your investigative itch. But again, all I want to say is I don't know who the person behind this address is. It is not transactions are not anonymous. Transactions are pseudonymous. I don't know who this is. Is it my next door neighbor? Who knows? Is it someone sitting in, Russia? Who knows? China? Or someone, a college kid sitting and, playing games and just try to do something? Who knows? I don't know. But it is, I would say, a pseudonymous. It's not anonymous. Now, next myth I want to talk about is it's used in darknet only. That's how they started, because people thought it's completely anonymous. And that time there were no KYC, etc. So it was being used for illegal purposes. That's how it got its start. But now it's been completely used for legal purposes. So states like Georgia, Arizona, they're pushing for bills to allow tax payment using Bitcoins. And yesterday I was reading through a news in which one of, I was a senator but for getting their, donation for elections, they're accepting Bitcoin, not just Bitcoins, they're accepting many other coins. Now, if you want to contribute for that particular senator for their elections, you can actually use Bitcoins. So user of Bitcoin is not prohibited. And things like Expedia, Intuit cookbooks, even they were allowing customers to pay in Bitcoin. I know Overstock.com was also, you could buy stuff on Overstock.com and then pay through Bitcoin. I don't know if they still allow that or did they withdraw it. But there were merchants in US and outside of US, in Europe, you can actually go and buy a coffee using Bitcoin. Not everywhere, but in some of the places. So it is not to be used only for illegal and darknet purposes. It is saying that, I go and get a drug from on the street, but I pay in cash. Then they say, oh, cash is to be used only for illegal purposes because you can't track it. That's exactly what, when we are saying Bitcoin is to be used only for illegal, that's exactly what we mean to say. No, there are perfectly legal usages for Bitcoin. Transacting in Bitcoin is not illegal in US. Charities, NGOs, many in US, they accept donations in Bitcoins. So, it's a myth that only people who are scammers, people who engage in illegal activities, only they use Bitcoins. Nothing can be further from truth. Some of the corporations, they've started paying their employee in Bitcoins. And I want at least those who have, running those cryptocurrency exchanges, at least they should definitely pay their employees in Bitcoin. They should believe in and pay their employees in Bitcoins. Some corporations are actually giving employees, choice. They want to get paid in cryptocurrency or in the fiat currency. So it is not to be only for darknet. Okay. Let me go through some questions. How does it not result in DDoS attacks? Scammers keep sending bad transactions. So Asif, I think the whole network of blockchain is really big. If you keep sending it, you don't know which miner is going to pick up. There are hundreds and thousands of miners, right? You're just posting this into the network and any miner can pick up. So it's not going to a personal central server. That's the whole beauty. You cannot run and flood one particular server because there are thousands of servers that are doing the same thing. So and DDoS is, for those who not aware, it's called distributed denial of service, which means if I have an internet server where I've hosted my website, someone is trying to access that website using the bots millions of times an hour or 100,000 times per second, that my server just crashed down. The reason in the blockchain is spread across thousands of servers. Okay, a question from Venu. With the transaction history, isn't it easier to find the hacker? We can't track him. Is that an issue with the bank transaction? We can track the person. With a bank transaction, you can track the person because the bank has done their know your customer. But there are many banks in the world in which I probably give them a forged document and they will be searching for that, person that does not exist in the world. So if companies like exchanges where we go and sell the Bitcoin, if they have done their homework, then yes, you can track it. But the problem is not the Bitcoin, but the intermediaries, they may not have done their know your customer processes well. So same is the case with the bank. What if I had given a forged identification document? Then even if I transact through bank, they can reach out to me as a person. Other thing is, on a bank, I withdraw cash, then it is untraceable. Vijay, they said use for direct. Yeah, that's the myth. That's how it all started, right? But no longer. So the public companies may not question from Asif is, would this openness be a problem, especially for public companies? They don't want the world to know who all we paid them before quarterly earnings. So right, again, you could still use blockchain, but it will not be public blockchain, right? So right now what we're talking about is Bitcoin blockchain, which is public, right? But the technology can be used in either way, right? The whole the underlying infrastructure behind internet is TCP IP technology. You can use it to create an open internet like we have, or you can use it to create your company specific intranet, which is not accessible from outside. So I don't think, but there are certain information which companies would want, and they're actually putting it on blockchain. Things like looking at the supply chain, right? Walmart has a project in which they want to track where each of the hog is coming from, in the supply chain. This has got a great use if you want to track, those blood diamonds. And me as a consumer, I want to be sure that if I'm buying a diamond, it's not a blood diamond. How do I track it? How do I make sure that the company which is selling me is actually giving me the correct record? If we have an open blockchain which tracks the whole supply chain of where this diamond is mined, how it moved through, then I don't have to depend a company which is selling me a diamond to tell me whether it's been ethically mined. It's not a blood diamond. There's a lot use cases of blockchain. FP has a crypto. FP actually wanted to get into currency, Libra, but they shelved their project because, again, usage of blockchain as a currency is facing headwinds from a lot of governments for all the right reasons, right? If people turn towards Bitcoin as a form of currency, then dollar and the governments that control it will lose their power. And that is why when Facebook started saying we would use Libra coin as to transact between the Facebook users, they did not get that much traction, even though they started with Visa and a lot of Amex and a lot of other established companies when they started this project. But most of them withdrew just because they don't want to antagonize US government at this point of a time. Can there be limitation BIT coins? There are hundreds and thousands of coins which are a copycat of this. So we have to be very, and again, this is a very new space, and Bitcoin is not the only coin. People, have generated coins left, right, and center, and that's where a lot of people get scammed, because we'll go and buy any other coins which has got no acceptability. Somebody has generated it, and people, have invested thinking every coin will grow in a value. It is the same way, right? A software company comes in, let's say 2000, a lot of anything which has got a website. Not every website is a genuine one. Not every website has got a business model. So be careful where you invest. I would say the similar cautions apply in this world also. But so you have to be careful in terms of which project you want to go behind. As if I meant for public crypto adoption to the extent it's actually used as a currency. So for public crypto adoption to be used as a currency, I don't think that, having it publicly available could be a big issue, because you may, so for example, we looked at one Twitter account, right? I could have a 15 different numbers, right? And I will only share one number where I will accept the payments. So you know my one account number, you can track, transact, and look at where that money is, that account number. That's okay. But from an adoption perspective, I mean, I don't think as a general public I'll have any issues in adoption. But again, we have to see. Like I said, this is such a new space that we don't have answers to all the questions right now. Forget me, even the whole community doesn't have any answers, all the answers to all the questions. We're just trying to figure it out. But it is an exciting space. Okay, next myth, Bitcoin is illegal. And again, it was perpetrated because people really did not understand the regulations that were put into multiple countries. Some people came and said, now China has told Bitcoin is illegal. That was incorrect. Because China banned the initial coin offering process, not Bitcoin as such. Now, coin offering, ICO, is similar to IPO. China told you can't do that. Okay, similarly, in SEC has mandated, I already talked about it. Korea had passed regulation saying anonymous trading of Bitcoin is illegal. Trading of Bitcoin is not illegal. So if you are trading on an exchange and they have done your KYC, you can transact in Korea. But if you're doing it anonymously or with a fake identity, that was illegal. Okay. Like I said, even holding or spending Bitcoin is not illegal in USA. But make sure you report your gains. And that's where the biggest trouble for me is the whole tax structure around the Bitcoin, because US, from an IRS perspective, it is not a currency. So today, if I go and spend, cash at Starbucks, I don't have to report it to IRS. But let's say today you go and sell your property and you gain from that, you have to report it to IRS. Again, I'm not a tax consultant and things could have changed between last I looked at was 2019 for taxation perspective. Maybe in a year it could have changed. But till then, IRS was considering Bitcoin as equivalent to as you're having a property. It's a capital asset. So if you go and buy a coffee from Bitcoin, you sold a Bitcoin. So you have to track at what price point you bought it. And when you expensed it for buying a coffee, that's a sale. You have to find out how much gain. You have to report it to IRS. So if you're trying to buy things from Bitcoin, even though merchants are allowing it, it's a big tax headache. So consult your CPA. Things could have changed. That's why for me, I just bought Bitcoin, I'm holding it. I don't want to get into those tax headaches unless this whole regulations become little friendly so that we can use it as really currency. Today, Bitcoin is treated as a capital asset in IRS terms. One USD could. So you can convert your Bitcoin to USD and vice versa. There are a lot of exchanges where you can withdraw the Bitcoin. So Kunal, we can get into, you can go to exchange and sell your Bitcoin and get a USD. You can do it on a Coinbase. Again, myth, you can hide Bitcoin gains from Uncle Sam. You can't. Because if you're in US, you're trading on Coinbase, Gemini, they all are regulated by SEC. They have to follow the land of land, which is in US means know your customer. So at any point of a time, if IRS wants, they can get an appropriate legal orders and can get the whole details of what you've done in your, not only just Bitcoin, but any cryptocurrency, which you have been buying and selling it and thought that, Uncle Sam won't know it. Please don't do it. So if you are trading in Bitcoin or any other coins, you must report your gains. You must pay taxes because Uncle Sam can see it all, knows it all. And this is a recent update from IRS in 2020 that they're becoming more strict. So earlier, I think it was up to individuals to come and report it, but now they're putting, what I heard was in the new form, they will be putting a kind of a placeholder which everyone would see, which is to just tell if there have been any gains from cryptocurrencies. And in 2019, IRS actually had gotten details of thousands of customers from Coinbase, just to check, how much of the Bitcoin they bought, how much of the currencies they bought and sold. And if those people have not reported on their tax forms, IRS will come knocking on their doors. So again, you can't hide it. Do the right thing. Trading in Bitcoin is not illegal. Evading the taxes that you owe by trading in Bitcoin is illegal. Okay, so don't do that. There are many exchanges. And Kraken is one, Poloniex is one, Poloniex, Kraken, Binance, Coinbase Pro, Coinbase, Gemini, tons of exchanges. Again, many exchanges are now not accepting customers from those who are US residents, because and this is what I don't like about our SEC or stuff, is that US customers are being shut off from many of those exchanges, and there are some things which trade only on those exchanges. Not every coins are accessible on all exchanges. So I had an account in Poloniex. I got an email saying that withdraw your assets, because beyond this date, we are shutting off access for all the US-based customers. So I had, and now if there is something coin or anything I'm interested in available only on Poloniex, good luck. I can't access it, that's all. So because everyone is so afraid of SEC and US government Justice Department coming behind, and suing them, because regulations are not so clear. So unknowingly, many of the exchanges might be violating some of the rules. Who knows? The rules are not very well clarified. So they're saying, you know what, we don't even want to take that risk. Let's not even accept any customers who are basically US residents. All right, so we talked about this decentralized world. We looked at various opportunities. One of the opportunities we dug deeper into was coins or currency, because that is what is in most people's vocabulary. People ask me, how about Bitcoin? How about Litecoin? How about Ethereum? All those are nothing but currency use cases. Right? So if we have to go into currency use cases, what are the opportunities? You have a direct opportunities. You trade assets, right? I would not call them coins, I would call them crypto assets. Like we have gold as an asset, stock is an asset, bond is an asset. This is also an asset. You could trade crypto assets, or you could become a miner. I will mine. I'm a miner. I want to mine the assets so that I get directly the assets. I don't have to go to exchange and buy and sell. I want to become a miner. Or you invest in initial coin offering, which is like initial public offering. As a US resident, you probably will be out of luck on most of these, because SEC considers many of these coin offerings as an IPO. And when these small, and these again, ICOs are very risky, because there are scammers who are floating these ICOs left, right, and center. So I would say don't even look at that. Or finally, you can build a business that solves a problem using blockchain. Indirect opportunities. There are funds that exist, and these all are tradable on US exchanges, GBTC, ARWK. Let me open up my trading platform, and we can see that also gives some rest to my throat. Okay. Meanwhile, any questions, please add it in the chat. I will not have answers to all the questions. Like I said, no one has. But it's an interesting space. I'll continue to read and maybe try to get an answers for you. Okay, let me just log into Thinkorswim. All right, so we talked about what GBTC. So you can buy or sell GBTC. It's a grayscale. Again, this is an investment management company. They have a Bitcoin trust. You can go onto their website and see. BLOK is, I think, is again a mutual fund which invests in companies that work on blockchain. It's an Amplify ETF. ETF from Amplify is basically look at what the holdings, etc. they have, and you can also have an options on this one. So there are, if you want to excited about the blockchain, you want to trade in blockchain directly, you can trade in the assets, or you can invest in the funds, or you can invest in a company which has exposure to this industry, right? Like Microsoft. Microsoft has now both Microsoft and IBM now provides BaaS, blockchain as a service. Right? So we talked about SaaS. Everyone knows SaaS, which is, you can buy computing power from Amazon, from Microsoft Azure, but now both Microsoft and IBM also has equivalent, which is called BaaS, blockchain as a service. You don't have to write your own blockchain. You can rent the whole blockchain infrastructure from Microsoft, from IBM. So if the demand for blockchain will explode in next decade, maybe these companies will ride the wave, right? ICE, which is Intercontinental Exchange, they actually own a digital currency exchange, which is called BACT. So Goldman Sachs has got investments in a lot of companies, those who are building products in this blockchain space. OSTK is Overstock. Overstock has got, they have their subsidiary called Medici Ventures, which invest in companies which are active in this Internet 3.0 space, right? So it's an indirect investment. Overstock.com is actually a retailer, but they have a Medici Ventures, which invest in startups or companies that are building products on this industry. Riot is again one ETF. I think it's a mutual fund, and I had earlier made good money in Riot. I think now I don't know what's in it. Yeah, Riot is again one blockchain ETF. Oh, it's so low, so it's easily manipulatable. Yeah, there are multiple ways, many other funds, right? Or you invest in the companies whose products are being used. Or it could be ARKW. My apologies. Let me just check. ARWK or ARKW? Yeah. Next generation international ETF. Okay, thank you. So, or you invest in companies whose products are being used. Why NVIDIA had such a great bullish run in 2017-18? Because everyone was buying NVIDIA's GPUs, right? If you need more computing power, maybe that's the case. Seagate Technologies, if the whole storage as a distributed storage on a blockchain becomes reality, and if there's a company which produces products on it, I think Seagate is working on it. If that picks up, who knows? That could be those. Again, we don't know which use cases will take off first, right? It could be a static websites, or will it directly go to Amazon.com? We don't know. So we have to be really careful. But all I'm right now sharing is, if you don't want to trade in assets directly, there are indirect opportunities available. So keep your eyes and ears open to these opportunities. But if you want to trade directly in crypto assets, treat it as any other asset class. It provides some diversification. You have to open an account in any exchange. Like if you want to buy and sell shares, you have to open an account with broker firms. Similarly, here you have to open an account with exchanges. There are Coinbase, there is a Galaxy, there are multiple exchanges which are available on which you can go and open an account. Once you open an account, you can transfer your money, your fiat currency. I'm assuming it's the first time you're doing it. So you can transfer USD from your bank account into, let's say if you're opening it in a Coinbase, into your Coinbase account. Then you can go and buy, like you go and buy shares. You can go into your Coinbase account and then you buy shares, etc. Or you buy cryptocurrency, etc. And if you want to sell, you sell. But remember, IRS, okay? One thing about this whole crypto exchanges, crypto world never sleeps. It's on 24/7. Anytime, throughout the day, throughout the night, any day of the week, it always stays on. Unlike our, we can trade in securities only 5 days, and the futures we have little more window. Crypto, there is no downtime. It's always on. When you're looking at exchanges, okay, I'll skip that. Basically, you have to look at, if you're very particular about one coin, you have to see if that coin is even available on that exchange or not. It was, I would say, earlier valid. Now I think Coinbase, which is generally the most popular among US residents, it was very particular about which companies or which coins they want to list. But now I think they got a lot more coins which are now available on their platform. Let me quickly look at. Let's look at what does Coinbase has now. So earlier they had only Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, but now I think they got a compound, EOS, Stellar, Lumens, Kyber, many of the things that are probably are pretty new. Tezos, DAI, Zcash, BAT, Xerex. Okay, so they got lot many coins now. But make sure if you are interested in one particular coin, make sure that exchange has it. Okay. And trade in very established exchanges. Don't trade in some exchange that has just opened up in a country that you don't even know. What are the financials of mining your own Bitcoin? I'll come to that. Once you got your Bitcoin, let's say you bought a Bitcoin, you went to Coinbase.com. What do you do with it? And this is where most of the people, they are uncomfortable with, because like I said, hacking the blockchain, Bitcoin blockchain, never happened. But somebody can hack into your account. Somebody may be able to hack into Coinbase account, right? So if you store and you leave your Bitcoin on Coinbase, which is what is called online wallet, like we keep our cash in our physical wallets, you store your Bitcoin in an online wallet, which could be with Coinbase. But if what Coinbase get hacked and the hackers steal everything from Coinbase, you're out of luck. So other option is, okay, or you could have a software wallet on your own computer. You could, rather than depending on Coinbase, you can get a wallet on your computer. But what if your computer crashes or someone hacks your computer? I think Coinbase probably has better security policies than you might be implementing on your own laptop. So you have to make a decision. You want to leave it on exchange, you want to bring it on your own laptop, or you want to move it completely out of internet. And that's what called cold storage wallets. Again, more work involved, the more secure you want to be. So this is least resistant. You bought it on Coinbase, leave it at exchange. But then you run into issue of if exchange get hacked. This is most secure, but need a lot more work from your end. Okay. So you have to figure out where you store it. That is why it has not become popular yet, because there is a lot of work involved. Okay, you don't want to, you can either go and buy or trade into exchanges, or you can mine it. You can be a miner. Or it means you will basically get all the computers put in a garage and drain the power that is needed by your city. Because now mining a Bitcoin is not easy. The reason is that there are so many miners already in who have big warehouses full of computer hardware that when you are competing with them, you just can't. So there's not much left in mining the Bitcoin for us being as a miner. In 2010, 11, 13, 14, where nobody knew about it, you could have mined Bitcoin on your laptop. Now you will need a full warehouse of servers to do it. Or because you can't get a warehouse, you can join something called a mining pool. It means there is a company which will get their warehouse and everything else, but you will basically join, you join the mining pool means you will actually lend the computing power of your laptop, your server, and to them. So they will basically, your server will become a one resource in the overall mining pool. And when you combine the computing power of thousands of those laptops, then they will be able to mine something. You will get a reward based on how much contribution you have done. Or lastly, you don't want to do any of these things, there are ways you can buy a mining contract. For example, you can, I think there are, forgot the name, but there are mining contracts available in which, like hash power, etc., in which you can go and just pay them the money and buy some hash power, which is what is being used to mine the Bitcoin. And as and when the mining happens, you will get rewarded. My personal take is mining is not a profitable anymore because the cost of mining is becoming exponentially high, because the difficulty is increasing on the blockchain, competition is increasing on the blockchain, and the reward is halving after every 4 years. So probably not, a big profitable business for us as a retail investors. That's my take. Or like I said, lastly, you participate in ICOs. Don't do it if you are in the US. There's too much of a risk involved. Okay, so here's a quick look. I didn't look at the alternative investment and how those are doing. This is what the latest chart. Bitcoin is at what? 10,371. This week change is down by what percent? 6 months change, 94% high. Ethereum 219% high. Chainlink is up 5% in 6 months. So there are a lot of coins, maybe around 1,800 to 2,000 plus coins. So do your homework if you want to venture into this space. This is exciting, confusing, and overwhelming, all the three at the same time. So we have to be really careful. Okay, so this brings me to the end of our Internet 3.0. I hope it was exciting for you. I'm very excited about this whole opportunity, not specifically on the Bitcoin. I mean, Bitcoin is just one example. It's like I'm going to invest in a website, right? But the opportunities that this technology can open for us is going to be tremendous. And we should keep our eyes and ears open for what's happening in the blockchain world. So if there are no further questions, then I'll talk about the latest and hottest thing on what's in this world, which is called decentralized finance, DeFi. As the name suggests, there are projects out there which are focusing on, decentralizing the whole exchanges. Why do I have to depend on NASDAQ? Today, NASDAQ, New York Stock Exchange, they got a monopoly, and Amex to some extent have got monopoly in US. If they decide to increase their exchange fee, broker will pass it on to us. I have no recourse. So many projects, and it's a very bubbly space right now. In past few months, is a decentralized finance. There are many exchanges where you can go and exchange coins, and those exchanges are decentralized. Coinbase is a centralized exchange. Coinbase can raise their fee, Coinbase can get hacked. Binance is a centralized exchange. Galaxy is a centralized exchange. Next step, which people are doing in the projects, is the decentralizing the whole financial world. And it is so, like I said, it's a very bubbly space. It's too much of a that's the FOMO that is not, Tesla FOMO doesn't even come close to it. I'll give you one example. There's a token called YearnFi. And again, this came in because nowadays yield farming is becoming very, very popular. That token from YearnFi, when it started at $800 or close to $1,000 in August. Last week, it was $38,000. I'm not kidding. It's $38,000. Because there's only 30,000 Wi-Fi, and yield farming has, they actually got a new tab for yield farming. I was just talking, yield farming is the new hottest thing. Now they got a tab here. Again, this is a completely new concept of, it's like a CDs, wherein you deposit your coins and you get in rate of interest. I have seen APIs as high as 6,000% on yield farming. So I'm not doing anything on this one, all disclaimer, but I'm watching this space. So that on the yield farming, there are coins, which is Wi-Fi, and that became actually some $38,000. What the heck? I thought Bitcoin was the highest at $20,000, but Wi-Fi actually had a hit $38,000. Let me see if I can bring that up. Oh, now it is 42. So one Wi-Fi coin is 42, and it jumped up 30% in last 24 hours. This is crazy, crazy space, guys. This is crazy space. So if you want to get into this rabbit hole, we can just get lost or completely be overwhelmed by this. So I won't suggest you jumping into this without, doing your homework. But this space, very exciting, could be very dangerous. If you get into it 42K to buy one and it crashes down to 20K, the sort of a FOMO we have never seen, even in, forget everything else. Where was it, 1,000? Some July or so. So now it is at what, 40K? Things are crazy in this world. So again, not a financial advice. You have to do your really homework in terms of how you want to participate in this. But I only want to look at from the terms of, it's got so many use cases, and I want to be aware of it. Which company is doing what work in this blockchain industry? And that was the whole purpose of this session. Okay, any questions? Sci-fi? Excited, overwhelmed? What's the reaction? Wow, exactly. That's what my 1 hour of walk turned into 3 hours of walk because I just couldn't put that down. I'm like, what's happening in this world? And I'm talking about 2017. Things have changed a lot. Yield farming didn't even exist then. There was no concept of DeFi then. But things have changed a lot. And again, I would still say it is in infancy. A lot of these projects will just fail. Half of these projects could be a scam. So we have to be really, really careful. Because there are people who are just, riding the wave. It depends on how much risk one can take. All right, so we had one more section to talk about trades. Let me see. Oh, 5 tabs are open. So Deepak, I actually lost my sleep for a few days because only thing I was doing is trying to understand how does a blockchain work. What is this Bitcoin? I read through the whole white paper of Satoshi Nakamoto, went into hundreds of YouTubes to understand what's the technology, because just that an asset is going up doesn't entice me unless I know why behind it. And what excited me most was the whole potential behind this technology. And then I just got sucked into it. And I had to extricate myself because I'm like, should I focus on options or should I focus on this? But now I think I don't have to spend that much time on options because I learned I can get back into this. All right, so that brings us back to our options world, our trades. Venus says invested in the past, got out with a small loss, might get into it again. Yeah, so I invested in the past. I think I sold it only once, and then I had to figure out all the cost bases, etc. And then I'm like, oh, I'm not trading it. So I'm kind of hodling it. In Bitcoin time, you don't say that I'm holding it. I'm hodling it, HODL. So I'm hodling. Yeah, Ramesh, I'll settle the NVIDIA AMD. Yeah. Again, that's another way to invest in this space, right? So you can probably buy the companies which are investing in this. I got into mining, tried building a machine, gave up. Oh yes, if you really want to look at, the mining farms, let's say, if you need to have the whole farm to mine Bitcoins, go to, probably someone will have images of their warehouses. You see, these are the Bitcoin miners sitting in China. Racks and racks of computing power, which only do is they mine a Bitcoin, and here I'm trying to mine a Bitcoin on my laptop. It doesn't work anymore. Right. So this is how BTC, again, these are the miners. Many of them are actually in China because the power that it consumes is cheaper. And then there are many in very cold countries like I think in Iceland, etc. Some people have companies have set up Bitcoin mining operations there because this whole computing process generates so much of a heat that you have to spend a lot more money in the cooling operations. But if you are in middle of Iceland, it's already super cold. So yeah, there's a huge power requirements. I know some of my friends, we actually wanted to get together, and my friend, he had a rental house in Texas. He was like, let's use that and all contribute to mine Bitcoin. I'm like, oh no, I'm not doing that. I'm happy in studying it and maybe trade exchanges or trade coin on exchanges directly. There are limited Bitcoins. What if a big guy software buy majority of them? It could. I mean, if that's the case, then SoftBank can buy any of the other companies also, right? So right now, Bitcoin, the moment SoftBank starts to buy it, right now it is $193 billion. I don't think even SoftBank can buy this one. This will suddenly start jumping up. And during the height of it, I think it was already close to $500 billion or $400 billion. So, and if price start to jump higher because there's a big investor coming in, they can this suddenly affect the price? Oh, looks like yes. I mean, there's a whole article about how SoftBank actually had impacted the $24 trillion US exchanges. So I don't think that as a threat for Bitcoin. Antminer S9. No, I don't have any experience with you know any of these mining gears. So not the right person to talk about Antminer. Okay. All right. So let's jump into our trade section. Silver still holding, nothing much to talk about. Gold we talked about, still holding. Let's look at SLV, GLD. Okay. Yeah, GLD is I'm still holding it. I have on GLD, I have an inverted position, $7 inverted. Total premium is $8.20, and right now GLD is about 183 or something, 182.45. So if it falls down another 50 cents and stays there for the I have October position. So yeah, if it comes back between 175 to 182, I could still exit this at a profit. And then another one is also inverted. I'm still holding both. I had a new October position, which is profitable, but not really where I want it to be. So I'm not selling it, but let's look at October position. This is my October position. I'm making some money, but not really, around 50%. So I hold it. And once it made 50%, we'll get out of it. There's a question. Okay, sorry. No further questions. Okay, so still holding that. eHealth, our original was September. We rolled it out to October for additional credit. So net, now in October, I have 75 put and a call spread at 85.90. So this is what the eHealth position is. 75 short put, 85.90 call spread. Total premium that we got is, if I account for everything, is $9.60. So if it stays between 75 and 85, we'll make 960. If it blows past our call spread, it's a no loss on the upside trade. So we'll still be okay. I'll still hold it. Probably we'll close it if we are making close to 50%. I know some of you followed on this one, so some of you have already rolled it out sooner than I did. I did it this week. CGC, Canopy Growth. Canopy Growth, I'm still holding the September position. Probably will roll it out this week. But I also opened October position. I'm bullish on this, especially after we have done the whole marijuana industry. I'm like, I should put some money behind this because I'm bullish it. So I opened another position, a $15 short put on Canopy Growth for October. That's the next one. All others I'm still holding it. There's nothing much to share. Unless you have a question on any of the positions. XLU, let's look at all right. So XLU, it is profitable, but still for this one, because this is kind of a straddle, I'll wait for 30% of max profit, then close it. Fastly, where is it? Still okay, still above our break even. We'll wait. I mean, all of these fell down. The tech stocks fell down, but they're still above our break even. JPM has been a good ticker for us. I know financials haven't done much, and that's exactly why I like this. Is they have been staying range bound. So we've been starting playing JPM from May onwards, and it has stayed range bound. So which has worked perfectly for us. We basically, our trades are these range bound trades that if stays between these, that's the best position. And I think this is my fourth trade on JPM. All three previous one were are profitable. Okay. Hey, you're welcome, Venu. Docu still holding it. Roku still holding it, even though it fell down a lot. It is below our short strike short put, but still above our break even. I'm still holding it, and I'll be okay. I mean, again, these all are defined risk trades, so don't have to worry much about it. Which are old ones were now has become a little profitable, still holding it, not where I want it to be. Paycom just went below our break even. Okay, our Paycom is just outside our break even, but it's an October trade, limited risk trade. I don't have to panic, still just holding it. Okay. So these are the old ones. New ones, I talked about canopy growth, right? Like I said, I mentioned that I'm bullish about CGC. So I'm putting my money where my mouth is. Again, not an investment advice, just from education I want to share. I opened another position in Baidu because I'd closed my September Baidu trade for profit. So again, a plain simple, it was a bullish tilted iron condor. I was slightly bullish when I opened it. Defined risk 1:4 risk ratio means I'm risking 400 to make 100, and I liked it. And after I put a trade, Baidu has moved little up, and because it was a skewed bullish iron condor, trade isn't profitable. But there's a lot more extrinsic value in this, so I'll wait for it to decay, and we'll take it off when it hits our profit target. Lastly is Eventbrite. With the economy reopening, the companies like Eventbrite, Live Nation, which basically manages the outdoor events, should do good. So I got into Eventbrite by selling a put at $10. I already was in Eventbrite, so this is kind of a reinforcing and adding more to position. Is I sold put and also a call to collect a little more premium. So 4 puts and 2 calls. You can consider 2 calls are covered calls because I hold 500 shares in my portfolio. So this is 4 puts. So I don't mind getting assigned on this one. When the economy opens up, when we are all back to attending concerts, etc., this should come back up. So that's all from a trades perspective. Any question that you may have, we'll be happy to answer that. Otherwise, we are done for today. And on our boot camp session, I'll dig into another option Greek, which is called Theta and Vega. And that will be our last session on the option Greeks on Wednesday. Cool. All right, looks like no further questions. Muni bonds, good phase investments. So bonds aren't doing anything with the interest rates so low. I'm not even looking at doing anything on the bonds, and especially on so I don't look to do much on the bonds, Liz. If at all I were to do anything on bonds, and again because I trade on options, I want to make sure that there are options listed. I will rather trade TLT, and I have position on TLT in my 401k account. With all disclaimer, I have TLT in 401k. I have 100, and I have just 13 because TLT, I can at least trade options and reduce my cost basis. But bonds are kind of constrained by Fed actions. There hasn't been much happening on bonds front. And with the interest rate so low, unless you really want I don't know at what phase of your investment you are or what's your purpose behind it. So I can't give you personalized advice. But I would look at bonds only if I'm in a retirement phase and I don't have a time to trade options and all that because I want to travel the world. I am on a cruise and I want a consistent, uninterrupted income. That may be a case where I may look at bonds. But until then, only bonds I will look at is TLT because there are options on it and I can trade actively on it. So I have no comments on the muni bonds with respect to that. Uh, I think from a returns perspective, I can probably find returns in better places. How far you think pullback will be continued? No crystal ball. And that's again, and I don't, whatever number I give you, it's like I'm pulling it out of a thin air. And whatever number anyone else give you, believe me, that person is also pulling out of a thin air. Because if somebody can predict that one, that they don't have to be part of this session or, should be sitting somewhere and on their own island. But here's the thing. I mean, markets have already, there's a lot of profit taking which has already happened, especially on the tech side, right? And I guess companies like Apple, etc., they're all, and NASDAQ is what, 10% or 15% lower their all-time high. Could there be more chances for correction, especially on the tech side? I personally believe that there could still be chances for further correction on the tech sector as a whole, right? How much would it be? I have no idea. So I'm positioning, excuse me. So I'm positioning myself because I can't predict the market. So only thing which I can control is how I position myself is, make sure we reduce our deltas on the tech stocks and have hedges in place, etc. All fund managers taking the profit to claim that they are better than the others. Yeah, so we don't have that constraint of quarter ending. So come, end of September, fund managers have to report how their quarterly performance have been. And if they have to show the realized gains, they have to realize gains by selling something. In that case, if you are bullish on some tickers, maybe start nibbling it. So I have been doing it, that nibbling on individual specific tickers is that every time when the companies that I want to invest in fall down 5%, 7%, I'll move some of the cash which I've been holding on side to open up positions on those tickers. Because again, I can't time the market. That is exercise which is futile. So if market falls, I'll pick up. And I have, stay hedged so that you don't get killed if market falls by another 10%, 20%. So that's how I'm positioning myself. So like I have positions on Apple, I nibbled some small positions on these gaming stocks. They were not, did not have as much high run up as like Apples and Teslas of the world. But I do foresee that the next growth for companies like Amazon and Microsoft, etc., virtual gaming is going to be big. May not be next year, 2 years, 3 years down the line. Twitch is going to add a lot more revenue to Amazon. So I want to start positioning myself in online gaming space. And, when these companies like EA, Electronic Arts, Activision Blizzard, some of the Take-Two, Interactive, when they fell down, I'm like, okay, let's start nibbling. Is it a good idea to invest in ETF mutual funds since you get distributions and pay taxes? Okay, so I don't invest in ETF from, that I want to get a I want to invest ETF because I cannot find out good players in the industry where I have a strong conviction. In that case, okay, I want to pick up a big ETF, I'll do it. I use ETFs for mostly around my option positions, but long-term hold, except gold, I don't think I have many ETFs, but I use options ETF heavily for options because they are little more less volatile. They are less volatile, little more stable than some of the individual stocks. So, for example, I have positions in XOP, XLE, XLF, XBI, XHB, XLU. So mutual funds I hate because of their high fee. All right, 2 more minutes before we disconnect the call. VOOVTI, and yeah, go ahead, Amit. Let me unmute you. All right.
Oh, hi, Vivek.
Yeah.
Actually, I wanted to ask a question. So, big commerce. So, I had a put. I sold a put of $90 put September 18th for $9. And as you know, after the earnings, big commerce went down. So, I rolled it over to October 16th for another $10 more premium. So, did I make a good trade, or should I have gone further out other than October? I know you don't advise, but I wanted to understand how this rollover works.
No, I think you made so now how much overall premium you have?
$9 plus $10, so $19.
So $19, and yours is 70 strike price, right?
Yeah, $90 strike price.
Oh, sorry, $90 strike price. So yeah, it's fine.
Yeah.
I mean, you rolling into October, and you did it this week because October is still 35 days out.
Because it was expiring on September 18th, that's why.
Yeah. So you did the right thing. You should have rolled it maybe earlier also. But if you roll it now, it's fine. You're rolling it to October, it's okay because still 35 days out. What I would, if you had rolled to October when it is only 20 days left, 10 days left, in that case, not gaining that much. But 35 days is fine. So I'm okay to open up a position in a new month if there are at least 20 days left for expiration. And looks like in big commerce, either you don't have much choice anyway. You have October or straight away January.
Correct, yeah.
Right. So you hang on October. When it gets closer to expiration period, I think the market makers will start opening up November positions on it. And that time, if big commerce hasn't come back up and you haven't closed the trade, you could roll it further down to November.
Okay. Right now, because big commerce recovered a little bit, I'm making like $200-300 now. Instead of $19, it's selling at $15 right now, $16. So I'm still thinking of holding it. So if it goes above 90, then I might just close my position.
Yeah, that's when. I mean, you can decide when you want to take profits. But I don't see any issue in you rolling out to October, and you can still stay in October for another 2-3 weeks. No issues.
Okay. Thank you, Vivek.
All right. All right. Anyone else have a question can raise their hands. I like that raising hand stuff. Okay. It's the question from Sachin. You mentioned virtual gaming. Which other companies other than Twitch, Sony, Microsoft will benefit? Again, there is so Penn, etc. They are on a different space. That Penn Gaming, so other companies is Nintendo, NTDOY. There is another one which is going IPO just now, is Unity, UBD. There is something which is going IPO this. Again, I have not studied that their S1, and I don't have much information, so I don't want to give you any kind of recommendations. But there are a few companies in this virtual gaming. DraftKings, Penn. These are the DraftKings, and I think even the Pen Gaming, they are the gaming which is specifically around uh, on this MLB, NFL, and their online versions. But there are the other things that we're talking about. Gamings are the general purpose games, like Call of Duty. I don't game much, so I forget much. I'm not a video game enthusiast, so I can't even name some of those games. Uh, but there are other platforms. Facebook tried to get into, but I don't think they have had any success with that. But Microsoft has one, Amazon Twitch has one. Those are getting much, much bigger. The pure gaming platform, not the sports betting. Yeah, Electronic Arts, Take Two, and ATVI, that I already mentioned. NTES, that's the ticker that I've never looked at from a gaming perspective. NetEase is it into gaming in China? I know I heard about NetEase in some other reference, not on gaming. Okay. Any tickers that we're looking, so I can share the watch list, right? So there are a lot of tickers that I have on my watch list, and I keep adding it when I feel, I want to enable it. And majority are tech, like Apple, Adobe, Amazon, Appian. Appian is low code software system provider. Activision, Alibaba, CGC, Cloudera, CrowdStrike. CrowdStrike is another one good company because we did a whole analysis of CrowdStrike and I found out that the amount of strength they have. Again, enabling it because it came down. I think it's back up, but these are some of the companies I want to have positions. Many of them are already, the valuations really high, like DocuSign, CrowdStrike. But I think over a long term, they should just do fine. So I'll someone else, Victor, yeah, if you can ping me on Slack, I can share the watch list if you want that. But specifically for next week, I don't think I'm looking anything specifically for next week. I don't know if Abhishek, our person behind the earnings calendar, has he shared the earnings yet? Otherwise, I will just work through my positions, which I already have. That's what I'll do. All right, like I said, very difficult to time the market. Not difficult, it is almost impossible to time the market. So my plan is I'll continue to stay engaged. And where I feel that probably market has risen up too much too soon, and if I have made my gains, I want to protect it. We reduce our deltas. We start to tone down our bullishness on our portfolio. But withdrawing from the market is not what I do. FedEx and Adobe next week. Okay, I don't have any positions in FedEx. Sometimes I feel that the FedEx has kind of just missed the boat on FedEx. I don't know why. I actually had some long position FedEx logged back, and then it never recovered, and I sold it off. And as always happens, after you sell off some of the positions, the stocks will just go to the moon. And now you have that price anchoring in mind, right? That's what it's called. Price anchoring is, and we have to develop mindset of not to do that anchoring. But in my mind, when I look at FedEx, I'm like, I sold it at that price. Why would I buy it now at 233? And it is completely idiotic way of thinking. I know it. But, I have not invested in FedEx. But at this point of a time, I think probably I may not. One other thing which I look at is, and I'm looking at a standard deviation, right? FedEx is now beyond, oh no, this is FedEx. That doesn't look too overvalued. I never looked at FedEx. So it is only beyond one standard deviation, which is okay. Yeah, but I have to look at in FedEx and see, after COVID, what are the tailwinds that this might have. But yeah, price anchoring just never works. I did not do that. I didn't invest in Amazon for quite a long time because I had that price point of $700, which is when I started thinking about it, and I didn't invest it. And after that, we all know what happened to Amazon. But then I came around that I'm like, I'm gonna put in money slowly by slowly, do it in Amazon, and have been doing it. You're not alone. Yeah, I think we have a what it says. We have a company in misery. You bought Tesla at 180. Yeah, we all have those numbers. I bought and sold, and then I've seen many stocks, just getting away. But then I also bought and held on to some stocks. It's only when I started doing options that time kind of became a little more holding on my long portfolio because I started selling options to reduce the cost basis. Right? The reason why I'm still on Slack, even though I bought it at I think 30 or 33, whatever that is, because I don't have to worry about if Slack falls another 31, not 33. Right? I bought at 30 some stock, then 33 some stock in 2019, December. I don't have to worry about Slack. Is my cost basis is less than 20. So after I started doing a lot of options, I've become a little more holder of long positions because earlier I was afraid and the market falls 10%, 15% stock. I'm like, oh, it's going down in the drain. Let's sell it off. And then once I sell it off, I anchor myself to that price. Stock comes back up. I'm not able to buy it. But nowadays, it's fine. It falls off. My cost basis is down. I'll keep reducing my cost basis. That's what at least options has helped me indirectly in my long holdings. Melly, yes, Melly is good. Melly, I got in around three. Melly, I have a mixed stories. I bought Melly long shares at 340, and I then sold some portion of it at around 500. But I retained. I would say I sold off like 30%. I retained 60% of my holdings. Now it is like close to 1,000 or something, and I still keep doing options on Melly to reduce my cost basis because now I don't have to really become aggressive on selling the stock. Sometimes I still feel, why am I holding the stock? Because I can still have the same position using options, but that's will take little time for me to become 100% option trader. I still have some stock investor mentality. That blood is still flowing in my veins. Maybe after some years, I'll completely become 100% options. Sumit, what OTM call did you sell on Slack? I actually have a OTM. I have this put in Slack, which is in the money now to roll it off. I don't have a OTM call. Yeah, DXEM shop and Melly. Yeah, like I said, I already have position in Melly, and then on top of it, I have an kind of this skewed iron condor in Melly. Now, which Melly is already here. So I will, my max risk in this is limited, but I actually sold this saying if Melly falls down this, I will be able to pick some shares at a lower cost basis. So I'm not adding anything more in Melly. I will basically next week, I will close this position for loss and, buy some shares at lower cost basis. Shop is another one which I got anchored. I bought Shop at 180, handful of stocks, starter position. And then it ran up so high. I'm like, oh, it will come back down. It'll come back down. How can I invest in Shop if I invested in 180? How can I buy it at 300? That's too much. How can I buy it 500? That's too much. And then it ran away. But I'm still holding my initial position. Good that I didn't sell off that one. But I should have added more, but I did not. Again, we have to change our mindset. around price anchoring. What I did not do was I did not spend too much time in studying going behind shop. So I did a starter position thinking, once I study it, then I'll open a position, never got a time. So this was kind of I would say I was lucky with shop. All right, kids, I have to go. And I didn't realize we're already 1:15. So sorry, rest of the discussion we can continue on our chat. So otherwise, I'll see some of you on Wednesday and the rest on next Saturday. Okay. All right. Before my kids start jumping up and down, I need to start making lunch. Cool. Well, thank you, everyone. I'll talk to you next week.